Hey everyone, we appreciate you joining us today for the conversation. We've got a lot of great topics to cover, and our goal is just very simple here. If you're a real estate agent or a broker, I want to keep you informed so you can better serve your customers and help grow your business. I've got a great group with me here today. My name is Mike Reibel. I'm a real estate broker. I've been with Realty Advantage and doing real estate for 28 years now as a branch manager, a broker and investor. Right now, I'm a licensed broker in Maryland, Washington, D.C., California, and Florida. So we're really excited to have you with us today and appreciate your time. And I want to introduce Paul Pykosh and Christine Gray.
Yes, I am Paul Pykosh. I'm a loan officer for AndyMac Home Mortgage. I've been in the mortgage business for 25 plus years. And how about Chris?
I am Christine Gray. I'm an associate broker, been licensed for more than 20 years, which sometimes I can't believe, but I am currently licensed in Maryland, DC, Virginia, and now Florida. So I'm very excited to be here today. Thank you.
Great, great. We're going to cover actually three topics here. Again, in the course of our business, we interact with a ton of agents and brokers and buyers and sellers for that matter. These are the three topics we're getting asked all the time. Realty Advantage has got 170 agents now, so we deal with a pretty diverse group of clientele. The questions we're getting all the time, number one is, home values. Buyers and sellers are asking, do you think there's a bubble? Where are prices going? Obviously, interest rates are on everybody's mind right now. And so we're going to talk about that. And then also we're going to jump into a new program that Paul has with AndyMac that I think is fantastic. So we're excited. If you guys have any questions, email them in. We'll have all of our contact information at the end there for you. Let's go ahead and jump into it. We're going to have a lot of slides. So we appreciate the support from AndyMac and also MBS Highway for some of the data that we're going to be showing you guys today. Again, this is very informative. It's real time. It's what's happening right now. So hopefully this helps you in your conversations with your customers. Again, to that first point, a lot of times people ask, hey, are we in a bubble? Again, I've been doing this for 28 years. So I got in 93, 94. So it's a very different market, obviously, and then to the financial crisis. So between the three of us, I think we've got, I was adding up earlier, something crazy, like 78 years of experience or something. So, things are always changing. There's always going to be something new happening in the market, but let's go ahead and get into it. When people ask, are we in a bubble? I guess what's really driving it is inventory. This is a great slide that Paul provided. Really just shows, historically what we're dealing with here as far as the number of homes for sale. One thing that really struck me was if you look at the blue average there, 2.5 million homes for sale. And right now you look where we are at 870. So the reason we wanted to really kind of walk you through some of this is to make sure that everybody's on the same page when you hear about, are things overpriced? Is there a bubble? So you really got to look at it. It's really supply and demand is what we're coming to. Paul, you want to speak a little bit to this?
Yeah, this shows number of households. So this is talking more about the demand side of things. And as you can see, the household sizes have grown from 2007 all the way up to 2021. It's pretty significant, and that's one of the causes of such the demand. The slide before obviously talked about supply being low, and this shows how many more people and households are potentially looking at buying homes.
Yeah, I mean, we get that a lot too. Our agents are saying, hey, as far as prices, what's your guess on what they're going to do? And what this slide shows, if you look at the information on the left there, it's 14 million more households since just 2007. So there's 3 million fewer homes out there. So it's really a supply and demand issue. So again, there's obviously other challenges, but we just want to make sure you guys are aware of these numbers. As we look at this slide, it just demonstrates how much incomes have come up back from 2006. As you can see, that gray area there, that's the financial crisis. The three of us were all, head deep in that. We were all real estate professionals working through that. And we get a lot of questions about that compared to what was happening in today's market.
Yeah, I do too, especially on the mortgage side, because they call it the mortgage crisis. There is a big difference and that I want to address here, because I'm getting a lot of questions and comments about people saying, oh, we're in a bubble just like we were in 2006 and 2007. And there's a big difference. We've talked about some of the differences between then and now based on supply and demand and how inventory is low, but also mortgages are done differently. Back then, there was loans out there for people that all they needed is a good credit score. There was no income verification, no asset verification.
No money down.
Very little vetting, no money down. Investor loans with no money down. Some loans went up to 125% equity. That was crazy stuff that was being done back then. Nowadays, those things are gone. We vet every single loan now. People are going to provide their income, their assets, we verify bank statements, we verify income. It's done very well compared to back then. So
It's
one
important
of the reasons
too.
why things crashed was all that speculation. We don't do those loans anymore.
Yeah, and today's buyer, you look at the demand. These are not speculators and investors. These are people looking for a home for their family. So with putting down large down payments. So definitely a different market altogether. This chart right here just shows the Case-Shiller index. We all know what these numbers are. Prices have just been going through the roof, and it's not speculation. This is strictly people need homes to live in. This is a chart, Paul. If you want to chat about this as far as interest rates, and you've been doing this a little while, got a lot of experience in the field for sure.
Yeah, the interest rate chart here shows what they were from 1972 to almost current. It covers the very beginning of 2022. The peak of the interest rates were in the 80s, where the inflation rate was very, very high, and the interest rates got up into the 18% range. The interest rates have been pretty low for the past 10 or so years. We've been well below 7% for quite a while. So if the spike you see now in interest rates is still within the historical lows of what we've been covering for the past 10 years.
It definitely puts it in perspective too. And I know that, I share this story often is, when I got in the business back in '94, if you had perfect credit and interest rates were 9–10%, that was normal. So I know it's been a little surprising to see the jumps that are happening now. But if you look at the historical track record, they're still very, very low. So we think there's a lot of great opportunity out there. So we want to chat about a couple things here, mainly as far as interest rate increases, spikes, whatever you want to call them, and how they can affect your deals. I'm going to kind of turn this over to Chris a little bit. Again, we've got 170 agents. So she does a lot of the interaction, helping agents with their transactions. So she gets a lot of experience with this here.
Lately, the issue we're seeing is how quickly the rates are rising. And if you're not educating your client and making sure you're in regular communication with the lender, that can cause issues with your transactions. Of course, if you have a buyer who was pre-approved 3 months ago, that might not apply today. If the rate is significantly different, you need to make sure that those pre-approval letters are current, just to make sure your buyer is qualified for what you're shopping. But the flip side to that is once you get into a contract or you have a listing and you're looking at offers, this is really important on both the buy side and the sell side. Make sure that those pre-approval letters are current, and current now means literally like the day before when they wrote the offer, not a month ago, not 2 weeks ago. It could be very different on that payment. So on the buy side, of course, you want to make sure your buyer's protected in case, you don't want to write an offer for something that they don't qualify for, but also on the listing side. So if you're looking at, 3 offers and you're comparing the terms, you need to make sure that those buyers are solid in those approvals. So same thing, if you're on the list side and then you hear a week later, oh, sorry, we don't qualify anymore because the rate went up, you've just wasted that time on the market for your seller. So the flip side to that too is, let's say you have a buyer who they take their time maybe to lock their rate. They might still qualify for a higher payment, but might not like it. They don't have a contractual out for that. This is just an example of some financing contingency verbiage. I know it's different in different jurisdictions, different states, but this is just an example. So this contract basically specifies that the buyer will qualify for specified financing at whatever rate or market rate. You have to remember that it has that sort of vague term in there. So let's say when the buyer wrote the offer, they were expecting an interest rate of 4.5. But by the time they do their paperwork with the lender, they lock their rate, it's 5%. If they still qualify for that, but they don't like the higher payment, they're still in contract. They can't get out. They're not protected to get out because they still qualify. That lender's not going to issue a denial letter. So you might be able to negotiate this term with the seller, just specify a max rate in there. But again, that's negotiable between buyer and seller. They would have to acknowledge that and initial the change. On the second page, again, this is just an example of this specific financing addendum. This does spell out the provision that, let's say the buyer didn't lock their rate right away. And that is the gray area, but let's say they waited 2 weeks to lock their rate and the rate has climbed significantly by then. Now they don't qualify, but because they waited so long to lock it, they might not be protected anyway. So even if the lender says, sorry, you no longer qualify for financing, that buyer might not be protected under the financing contingency because they weren't diligent and they didn't lock the rate right away, knowing our current environment. So I would argue to lock that rate and be protected, it's literally got to be within a day or two of ratification. So you need to be careful of timing here as well.
Hey, Paul, did you have any thoughts on that as far as buyers locking in? Any advice?
Yeah, I agree. The trend that we have had recently and the risk of them going up more definitely outweighs any chance of gambling for a small drop in any rates day to day. The trend is definitely upward, and I encourage my buyers and everybody to just lock in as soon as possible to avoid any problems down the road for sure.
Sure. Yeah, it's great, great advice. And we want to remind people too, is I had a great conversation with an agent earlier in the week. He had said, well, what's going to happen if demand goes down? And we all know that there, especially for those competitive neighborhoods, the communities that everybody really, really wants to live in, there's nothing for sale. So when something comes out, there's so much competition. And my point again is we've got historically low interest rates. So if the buyer demand goes down a little bit and we see a little bit of a softening on prices, I think it's welcome. I think what we were seeing 2 months back is just simply not healthy, where you've got so many people bidding on a house and waiving important items like home inspections and appraisal contingencies. That's not a healthy environment. You want more balance. But again, it's still, if you look at this chart, this is one of our local markets that we work in, and you can just see the 5-year average there of number of listings. It's extremely competitive. That's not going to change. And if you go from 10 buyers bidding on a house down to 3 or 4 buyers bidding, it's still, again, it's a seller's market. There's a lot of demand out there, and as everyone knows, one of the biggest challenges is being competitive with cash offers, especially with inflation creeping in. You've got a lot of people that are moving cash into assets such as real estate, so you're competing with more cash buyers. So I think it's a good segue into our last piece of the chat here today is this new program that Paul is launching. Again, it just gives you, as an agent, another tool to help your buyers compete against some of these cash offers in such a competitive environment. So Paul, I'll kick this over to you.
Yeah. I'm just going to reiterate what you just said briefly, because it's important to understand why this program is here and how it benefits our buyers. The supply, like we just talked about, is not really going to change anytime soon. Demand is still up. That doesn't change too much right yet. Rates are going up to slow that down a little bit, but it's still not taking place. So if you're in a situation where you want to buy a home and you still have to compete with cash offers, most likely you're going to be on the bottom of the list when it comes to winning that bid. Unless you are a cash offer, that definitely puts you to the top of the considerations when you're buying a home. So we at AnnieMac have developed a creative way to help buyers buy houses and become cash offers. We basically back our buyers with a cash offer. We have a division called AnnieMac Private Equity, and they're going to be the ones funding these cases. So when we have a pre-approved buyer, that's the important piece. We don't do pre-qualifications for this program. It's a full pre-approval. We underwrite the loan in the very, very beginning, so there's no potential issues, no questions that somebody's qualified for a loan. And then we can step in and back that with our cash offer. AnnieMac Private Equity will step in and say, okay, we're going to back this offer with a cash offer. It's, there's some complications to it and some nuances to it, but I want everybody to know it's there. And for more information, we can get down into, drill down into more details with it. But it's there for folks. It's coming live to Maryland on the 23rd of May, and it's already in other states. So stay tuned.
Already approved in Florida, right?
Yeah, it's already approved in Florida. We've been doing them in New Jersey and Pennsylvania. It's now in Florida, and it's going to be rolled out to Maryland and Virginia on May 23rd. So stay tuned for that. If you have buyers that are interested in this, or you are, get in touch with me, because let's get them pre-approved so they're ready for this when it comes out.
Yeah, this is a fantastic program, especially given the environment we're in. So we're going to do a separate Zoom just on this program, so you can really get into the details. But again, it's just one more tool. This is a kind of a game changer if you've got someone who's financing great buyers, but they're just losing out houses to either cash offers or extremely large down payments. So I personally don't think that environment's going to change. I think that prices hopefully will level off a little bit, but there's still a ton of demand out there. And again, just with the millennials coming into the space, you've got a whole generation that's larger than anything we've seen in our careers. They're starting their families, so that wave of demand is just going to continue to grow. So again, reach out to us. We're here for you guys. We really appreciate your time. Obviously, you can see up there's Paul's email address, his direct line. Those are my email address for myself and for Christine. If you want to visit our websites, that first link there on the right, you can go to that website and actually start your application, right, Paul? Right from that website?
Oh, yes. Yep. Okay. Plenty of other information on the webpage too, but there is a tab for apply now to start an application.
Fantastic. And there's a link for our company website there. Again, Realty Advantage is a full service brokerage. We're doing business in Maryland, DC, Virginia, and now Florida. So we're excited about that. We'd love to help you grow your business any way we can. Don't be shy, reach out to us, and we appreciate everybody's time. Thank you for coming.
Thank you.
Thank you.